I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015. Joining me is Kevin Shields, Chairman and CEO of Griffin Capital Essential Asset REIT. Kevin, thanks so much for joining us.
Thanks for having me.
Now, how has the public non-listed REIT landscape changed following the FINRA customer account rule?
So, FINRA Regulatory Notice 1502 takes effect April 11, 2016. So I'd say the landscape hasn't really changed much yet, but it's starting to change and it's evolving relatively quickly. Because financial advisors, as they're anticipating what's going to happen once the account statement shows up at net investment methodology at $8.90 a share using 10 as a mark, are starting to prepare themselves for what kind of shock that's going to leave to the system of the investors that invested at $10 the month before. So what's starting to happen is the market and the sponsor community and the broker-dealer community are starting to coalesce around alternative share class structures that are going to address 1502, lessen the front-end load, maybe pay it over time through a trail commission, to address those kinds of issues to lessen, as I said, lessen the impact of 1502.
And for your company specifically, where are you finding the best investment opportunities now?
So we have a few different verticals right now. We have the Essential Asset REIT 2, which is focused on buying long-term single-tenant net lease office and industrial properties. So we still see a lot of opportunities, albeit globally, really nationally anyway, from a real estate perspective, cap rates have compressed quite a bit over the last couple of years. But we still see a lot of really great opportunities in that space. We just finished closing off Griffin American Healthcare REIT 3, which buys medical office, assisted living, skilled nursing, and hospitals. We raised $1.9 billion around that strategy over a 7 or 8 month period of time. We closed that off in February, so we're deploying that capital right now. We've got a fairly robust pipeline. And then we just launched a BDC, a Business Development Corporation, with Benefit Street Partners, which is a $9.5 billion debt sleeve inside of Providence Equity, which is a $40 billion private equity sleeve. So a lot of interesting opportunities in middle market lending.
And lastly, do you think the DOL Fiduciary Rule will come into effect?
For better or worse, yes. I think it will come into effect. It remains to be seen what it's going to look like. We're still waiting for some published guidance there. I'm a little disappointed that this is an agenda on the DOL side, which really affects ERISA and qualified money. To me, it's really more appropriate held at the SEC level, so we kind of impact the entire industry all at once rather than just really half the industry. I mean, about half of our industry on the non-listed REIT side is qualified money. But I tell you, the headline as it relates to that issue is pretty straightforward, which is, hey, all we want is for you to put the investor's interest ahead of your own as a financial advisor or broker-dealer. It's got a lot of sex appeal, that headline. Unfortunately, I think it's going to box a lot of the smaller investors out of the financial services arena, and those are probably the investors that need it the most. So it's a little unfortunate as the way it's starting to play out, but play out it will.
Kevin, thank you so much for joining us.
All right, thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.